Getting started on the stock market. Imagine for a moment that every dollar you invest today could work for you for years, generating passive income and bringing you closer to your financial dreams. Yes, the stock market can do exactly that, but only if you know how to approach it. Many people think the stock market is only for experts, professional traders, or the wealthy. The truth? Absolutely not. Even if you're just starting out, investing in the stock market can be one of the smartest and most powerful decisions you'll make for your future. Many beginners remain paralyzed by fear. What if I lose everything? I don't understand anything about stocks. The stock market is too complicated. These myths are everywhere, and they prevent thousands of people from taking advantage of a huge opportunity. But the reality is simple. The stock market is not a game of chance. It's not a lottery. It's a place where you can make your money grow with method, patience, and discipline. Every successful investor started out just like you, knowing nothing, with only the desire to learn and progress. And that's where education comes in. Before you even buy your first stock, it's crucial to understand the basics, educate yourself, and most importantly, develop a clear strategy. Education protects you from costly mistakes and gives you the confidence to move forward. The more you understand the mechanics, the better equipped you'll be to make informed decisions and turn your fears into opportunities. So if you've always thought the stock market wasn't for you, think again. Today, we're going to show you how, step by step, even as a beginner, you can invest intelligently and start building your financial future. Get ready to discover that the stock market isn't a scary monster, but a powerful ally, if you know how to use it. Understanding the basics of the stock market. Before you put your money into the stock market, it's essential to understand what it really is and how it works. So what exactly is the stock market? Think of it like a large market, but instead of buying fruit or clothes, you buy and sell company shares, stocks, and other financial instruments. Its role? To enable companies to raise funds to grow and to offer investors the opportunity to become part owners of these companies and profit from their success. Now, let's talk about the different financial instruments you will often encounter. Stocks. These are shares in a company. If the company thrives, the value of your shares increases, and you may even receive dividends, a kind of profit sharing. Bonds. These are loans you make to a company or government. In exchange, you receive regular interest. They are often less risky than stocks, but also offer more modest returns. ETFs. Exchange-traded funds. Imagine a basket containing several stocks or bonds. Buying an ETF means investing in this basket, which allows you to easily diversify your investment and limit risk. Investment funds. These are professionally managed portfolios that invest your money in different stocks and bonds according to a defined strategy. Of course, the stock market isn't a magical place where money grows by itself. There are risks. Prices go up and down, and it's possible to lose part of your investment. But there are also incredible opportunities. With the right strategy, patience, and knowledge of the basics, the stock market can offer returns far higher than those of a traditional savings account. The bottom line, the stock market is a powerful tool. Understanding its mechanisms and financial instruments is the first step in transforming fear and uncertainty into confidence and opportunity. Even as a beginner, you can start investing intelligently, provided you know what you're doing. The fundamental principles of an investment strategy. Investing without a strategy is like navigating without a compass. You can make progress, but you're more likely to get lost. Even before you buy a stock or ETF, it's crucial to lay a solid foundation. A good investment strategy always starts with clear principles that will guide you through the ups and downs of the market. 1. Define your financial goals. Ask yourself, why do you want to invest? Is it to prepare for retirement, buy a house, finance your children's education, or simply make your savings grow? Each objective influences how you invest. For example, someone investing for retirement in 30 years will not have the same strategy as someone who wants to buy an apartment in 5 years. Defining your objectives means mapping out your roadmap and avoiding making impulsive decisions. 2. Diversify your portfolio. A proverb says, "Don't put all your eggs in one basket." Well, in the stock market, it's exactly the same thing. If you put all your money into a single stock and that company collapses, you lose big. On the other hand, if you diversify across several sectors, regions of the world, or types of assets, even in uncertainty, there is this deep feeling that everything is in the hands of Allah. Sakina is a mark that the bond is pure, sincere, and possibly destined. It is this feeling that the Quran describes. It is He who created for you spouses from among yourselves, that you may find tranquility in them. Quran 30:21. Imagine a young man who has been attracted to someone for a long time. He observes, reflects, and notes every sign: her strengthened faith, mutual respect, aligned values, and above all, the serenity that fills him when he thinks of her. Every time he steps back, he feels that sakina, that confirms that the connection could indeed be guided by Allah. By applying these 4 points as a spiritual guide, you learn to listen to your heart while remaining attentive to divine guidance. It is not a path of haste, but of discernment, patience, and trust. True destiny, when willed by Allah, manifests itself through clear signs, lasting inner peace, and conformity with the faith and values of Islam. So recognizing whether this person is truly your destiny depends not only on your desire or emotions, but also on spiritual alignment, respect, religious compliance, and the deep serenity you feel in your heart. These signs, when present, are a gentle and clear reminder that the relationship you are experiencing is being watched over, guided, and blessed by Allah. If you feel that this person is a sign from Allah, don't push her away. Don't let your heart struggle with these emotions alone. Entrust it to Allah, the one who knows what we do not see, the one who guides hearts and destinies. Your attachment, your thoughts, your dreams about this person can be a reminder, a message, a guide. Accept them with sincerity, humility, and patience. Stay attentive to the signs that Allah places on your path. Observe the consistency of thoughts, the coincidences that seem improbable, and above all, this feeling of inner peace, this sakina that invades your heart. All of this is never trivial. Pray, seek guidance, perform salat istikhara to ask Allah to show you the right path, the one that is in accordance with His will and for your good. It's normal to feel uncertain. You may sometimes doubt, wondering if what you're feeling is real or just an illusion. But remember, Allah sees your heart, He knows your intentions, and He knows what is best for you. The best action is to turn to Him, place your heart in His hands, and ask Him to purify your thoughts, emotions, and decisions. Here is a complete dua that you can recite. O Allah, Creator of the heavens and the earth, You who guide the hearts and illuminate the paths, I entrust to You what I feel. If this person is a sign of Your love and Your plan for me, purify my heart of all fear, all doubt, and bring our souls together with sincerity and kindness. O Allah, make this bond a blessing. May it bring me peace, serenity, and guidance, and keep me away from all confusion or unnecessary hardship. Give me the clarity to distinguish what comes from You and what comes from my nafs. O Lord, prepare my heart and the heart of this person for goodness, sincere love, and tranquility in respect of your will and faith. Amen. While waiting for this guidance to manifest, continue to pray for yourself and others. Remain humble, patient, and open to the signs of Allah. Even if things don't turn out the way you want them to immediately, know that everything Allah does is for the best, even if your mind doesn't yet understand it. If you feel sincerity in your heart, share this video with those who are going through the same situation. Comment on your experiences, your feelings, and encourage others to entrust their hearts to Allah. Every prayer, every pure thought, every sincere intention is a step towards guidance, clarity, and the destiny that Allah has prepared for you. Never forget that your heart is precious and that Allah sometimes places signs and reminders in it to guide you. Listen to it, trust it, and let Allah's light illuminate your path. Patience, prayer, and faith are your most powerful allies. And when the time comes, you will recognize this connection by the peace and serenity it brings, and by the certainty that this is indeed Allah's plan. Stocks, bonds, ETFs, etc., you significantly reduce your risks. Diversification is your best insurance against the unexpected. 3. The investment horizon. Your time horizon, that is, how long you're willing to leave your money invested, plays a central role. In the short term, 1 to 3 years, markets can be highly volatile and unpredictable. But over the long term, 10, 20, 30 years, markets tend to grow despite crises and temporary declines. This is why great investors always emphasize patience. The longer your horizon, the greater your chances of success. 4. Risk management. Finally, we must address the crux of the matter: risk. In the stock market, there is no such thing as a risk-free investment, but there are smart ways to manage it. Never invest all your money at once, and even less so in a single stock. Start small, invest gradually, and always keep some of your capital available in case of an emergency. Risk management is what allows you to remain calm even when the markets are going through storms. In short, a sound investment strategy isn't based on luck or quick wins. It's based on clear goals, good diversification, a long-term vision, and prudent risk management. These principles are like the foundations of a house, invisible perhaps, but essential for everything else to stand. Strategies to follow to get started. Now that you understand the basics and fundamentals, let's get down to business. How to actually start investing in the stock market, even if you're a beginner. There's no need to overcomplicate things or know everything from the start. There are simple, effective strategies to help you take your first steps with confidence. 1. Invest in ETFs, or exchange-traded funds are often the best choice for beginners. Why? Because they allow you to invest in a basket of stocks or bonds at a time. This means that even with a small amount of capital, you are already diversified, and therefore less exposed to the risks of a single company going under. In addition, fees are generally very low compared to other financial products, which maximizes your long-term gains. For a beginner, it's a simple, safe, and powerful tool. 2. Invest gradually. Dollar cost averaging. Another key strategy is to invest regularly, little by little, instead of putting all your money in at once. This method, called dollar cost averaging, protects you against market fluctuations. For example, if you invest a fixed amount every month, you buy stocks at different prices, sometimes low, sometimes high. Over time, this smooths out your costs and reduces the stress of market fluctuations. You don't need to time the market, which is practically impossible even for professionals. 3. Follow the big clues. To begin, it's often wise to focus on major stock market indices, like the CAC 40 in France or the S&P 500 in the United States. Why? Because they represent a broad cross-section of the best companies, and their historical performance shows that, over the long term, these indices grow steadily. Investing in these indices, either directly or through an ETF, allows you to benefit from overall market growth without having to choose a specific company. 4. Stay informed about economic trends. Finally, staying informed about major economic trends is essential. Information on interest rates, inflation, monetary policies, and industry developments can influence your decisions. You don't need to become an expert, but following major financial news helps you better understand why the market is moving and adjust your strategy if necessary. In summary, to get started in the stock market, start simple, diversify with ETFs, invest regularly, focus on solid indices, and stay attentive to economic news. With these strategies, you can move forward step by step, safely, and build your financial future without stress or rushing. Mistakes to avoid. As a beginner, investing in the stock market can be exciting, but beware. There are many pitfalls, especially when you're just starting out. Recognizing these mistakes from the start can save you time, money, and most importantly, avoid a lot of unnecessary stress. 1. Panic during market declines. Imagine you buy your first stock, and a few days later, the market drops sharply. It's normal to be afraid, but it's precisely at these moments that many beginners make a mistake. Panic selling everything. Markets are volatile, meaning they constantly rise and fall. Successful investors know that patience is key. Temporary dips are normal, and in the long run, the market tends to recover. Learning to stay calm in the face of these fluctuations is essential to protecting your capital and enjoying future growth. 2. Investing without knowledge. Another common mistake is jumping in without really understanding what you're investing in. Buying stocks haphazardly or following unverified advice can be disastrous. Every investment should be based on a minimal understanding of the company, its industry, and its prospects. The stock market rewards caution and preparation, not improvisation. Take the time to learn, even a little each day, before committing your money. 3. Wanting to win quickly. Finally, the most common trap is wanting quick profits. Many beginners hope to double their investment in a few weeks. But the reality is simple. Fortunes are built slowly and steadily, not by following lucky breaks. Seeking to win quickly increases the risk of significant losses. Investing in the stock market is a marathon, not a sprint. Thinking long-term and staying disciplined will bring you much stronger and more lasting results. In summary, to avoid common mistakes, stay calm in the face of declines, invest with full knowledge of the facts, and forget about quick wins. Learn to control your emotions and adopt a thoughtful approach. This discipline will allow you to transform your early days in the stock market into a positive and profitable experience in the long run. How to track and adjust your strategy over time. Investing in the stock market doesn't end when you buy your first stock or ETF. To achieve long-term success, it's essential to regularly monitor and adjust your strategy. This helps you stay aligned with your goals and avoid unpleasant surprises. 1. Regularly reassess your portfolio. Your portfolio isn't static. Values change. Some stocks may outperform while others stagnate. That's why it's crucial to take the time, at least once a quarter, to review your investments. Are they still aligned with your objectives? Should you rebalance certain positions to limit risk or take advantage of new opportunities? This regular reassessment allows you to stay in control of your strategy and prevent your portfolio from heading in an unexpected direction. 2. Continuous training. The market is constantly evolving. New companies emerge, sectors shift, and innovative financial products emerge. Even if you've already mastered the basics, it's important to keep learning. Take training courses, read articles, and listen to trusted experts. The more informed you are, the better equipped you'll be to make informed decisions and adapt to market changes. Continuing education is one of the best ways to secure your investments and stay competitive. 3. Use tracking tools. Fortunately, technology makes this step much simpler. There are now numerous tracking apps and platforms that allow you to monitor your portfolio's performance in real time, receive alerts on major fluctuations, and even analyze your investment allocation. Whether through mobile apps like TradingView, Binance, or your banking platform, these tools are essential for staying organized and making quick, informed decisions. In short, tracking and adjusting your strategy is what transforms a simple investment into truly proactive money management. Reassess regularly, keep learning, and use the right tools. This is how you can grow your portfolio intelligently and securely. The importance of patience and discipline. Investing in the stock market isn't a sprint, it's a marathon. The best investors aren't those looking for quick profits. They're those who take a long-term view. They understand that the market has its ups and downs, and that real growth takes years, sometimes decades, to build. Understanding this completely changes your approach. Instead of panicking in the face of a decline, you learn to see opportunities and stay focused on your goals. The key to success in the stock market is discipline. Patience and consistency are more important than making quick profits or following current trends. Investing regularly, even in small amounts, adds up over time and can create a snowball effect on your capital. This is exactly what separates a prudent and persistent investor from a beginner who gets discouraged at the first obstacle. And here's the most important thing. There's never a better time to start than now. Even with a small budget, even if you're a beginner, every step counts. Dare to invest, dare to learn, and dare to build your financial future. Every euro invested wisely today is a seed that can pay off enormously tomorrow. So take your courage in both hands, set your goals, apply the strategies we've seen, and get started now. Patience, discipline, and education are your best allies in turning your money into real leverage for your dreams and financial security.